Welcome to Trading Lounge and the Australian report for Thursday 13th of January. So on the, what's this, the 4-hour chart here. So we've got this big pattern here. So I know that it's bullish corrective, and I also know that the resources, metals, copper, nickel, all of these sorts of things are going to push higher. So it's just how do we get there first? There's a good case for an A wave here, a B wave here, and a C wave here for wave 4, but then it doesn't really present a nice 5-wave structure here. It's pretty dodgy. Then we've got the situation where it proves quite nicely as an A, B, C, D, and E wave here for this. And it does present a nice sort of impulse wave up here. I suppose we could squeeze 1 and 2 and 3 and 4 and 5 out of here. Or we could go to 5 here with an A and a B and a C, a little bit weird as an expanded flat. The only way I could sort of resolve this is by getting support on the 75. Now, I can see the market getting to 75, but will it find support on that level? I just don't know. What we've been looking at with the US markets is this 5-wave structure to the downside. And even if I've got this 5-wave structure wrong to this point, we'd still have wave 4 here and then a new low here. So we'd still have the 5 waves here if I had it wrong anyway. But otherwise, still, even as a B wave down here, because sometimes an A wave, this is in 3 waves up here, so it's corrective. This move here appears to be corrective, and it's okay for an A, B, and C wave here in 5 waves to take us to the 61.8% and then fail at that point. And it's kind of what we've been looking for on the US markets as well. So this is just the S&P 500 here. We've also got 5 waves down here, and stocks like Apple, Tesla, Microsoft have got a very clear 5-wave structure down through here. I know I could force that being into a corrective pattern, but it doesn't really sit that sort of well. I could look at it as a bit of a rare pattern, but part of the flat correction family where there's 3 types of flat corrections in the market, and this would be a running flat with wave C with this wave C over here, with the wave 4 being here as an ABC. So that could work. It's a pretty rare sort of pattern, really, but still, it's it's possible. The other point here, instead of turning bearish here, then I would need to see 5 waves up here, as we've got 1 here and 2 here, and we can look at this as a 3rd wave up here. So we'd still need the 4th wave here and a 5th wave here. And even if we got the 5th wave, then there would be an ABC pattern back at that point, and then we would load up and go up at that point. So yeah, it's the US stocks that have really given us this 5-wave structure down, and I won't bore you with that. You can watch the stock video that I put out this morning or whenever, or this morning, and yeah, so so there's a good case for it to come down. I know we got support on this. It doesn't look like a very nice support, but a bit spiky, but there's a lot of traffic sitting on that, volume sitting on that support there. I was looking up here, we've got 3 waves up here so far, just in case I had this wave 5 sitting over here, this wave 5 waves down for wave 1 here, then an ABC pattern here. But it looks like we can push up from here. So it looks like we've got sort of 5 waves up from that point. So I'm going to put this back to where I originally had it over here, and then look for 5 waves up into this little space, which I'll just bring across here somewhere there. And if I get a classic trading levels pattern here, well, then we're bullish. It's simple as that. But we need to count 5 waves up there. So this is what we're going to do now. Just go to the hourly chart where we had this thing yesterday. So from here, we can go 1 and 2 and 3 here, and then you can see how complicated it is through here. So it makes it a good 4th wave. Sure, it could drop from here. It could just be 3 waves to here, and then 5 waves down here, and then some sort of A, B, C little correction here, and then drop here. So what I can say for that on the short side is we'd need to be short below this level here, that low. That would be the safe trade to the downside, because any move down from there you would be overlapping wave 1, and we're already overlapping wave 1, but we'll give it a little bit of space. We've got to be a little bit mature about these things when you're working with markets with leverage, and this is a leverage product here. It's a CFD product, which means that there's a couple of things involved in that, in terms that follows the cash market and the futures market, and also a thing called fair value So sort of that's it in a bit of a nutshell. But let's go to the tick chart here, where we've been looking at this in a bit more detail. Let's just get in some more data here. That's plenty. So yeah, so wave one being over here, an A wave and a B wave here, and then I was looking at I can't remember how I had this counted now, but I don't know if I had it for an A and a B and a C, or had it in one. Oh, I probably had it in green wave A and green wave B, or something like that. And yeah, I did. Yeah, I would have done green wave A here and green wave B here, and looking for green wave C here. But I mean, that's quite bearish here, so we can just drop from here, as I mentioned. You may have a long trade in here that we talked about, and we could look at being long again here. That looks a little bit impulsive, so we could go long above that one. I was going to go long above that one. That also appears to be 5 waves up here, but like I said, this could be down for 1 here, some sort of A, B and C wave here, and then down for 1, back for 2, and drop from here. So this is where we're also looking to be short below here, but we can also put that under here now. So just really for short-term traders, you know, that should get the morning sort of squeeze out the way a bit. And yeah, but otherwise we can look at this here as a bit of a C, 1, 2, 3, 4, 5 for the C wave here for wave 4, and then wave 1 and 2 and 1 and 2, and then building up here for 5 waves up here. Well, 5 waves from looking at this here as wave 1 here, wave 2 here, wave 3 here, wave 4 coming across here, and then pushing up there. So if you see, you know, well, the other way to look at it is the 74.50 here, which is the midpoint, halfway between the 400 and the 500. We've got the Fibonacci sequence 1, 2, 3, 5 and 8. So it's an important level, and you can see that. So if you can just be a little bit patient as well, you should be able to see this market sort of, you know, vibrate, wiggle around and wobble around, and try end up getting support there. So visually, you know, popping its head up here is not support. You need to create the first high above the level and then come back and sit on it. And sometimes it's an ugly picture and sometimes it's really nice. And if you kind of be mindful of it, after a while you'll kind of understand the personality of the market that you're working with, because all the markets are the same, but they're all uniquely different as well. Some are smooth, some are rough, all sorts of things, you know, depending on the volume that comes into them. So, yeah, so that's where we are with this. And CBA is not much help to us either at this particular point. Still in the torture chambers with this. So we've still got this as because we've got a nice 5 waves down here, and then we've got the A, the B and the C, which I mean, I can call that wave 1 and 2 and 1 and 2, or wave 3 and so on. But I was looking for one more little high here, and even then I won't go long. But once we got that new high above here, then we can look at being long above that high, wherever that may be, and it might be at the, you know, it might be higher at the 5 here or wherever it may be. And otherwise, if it drops any lower here, then we're going to create overlapping wave structures, and we'll look for 100 to be the retested resistance, and then move in from that point. Now, the tick chart still doesn't really give us any clear indication. I'm still in the guessing game. As you know, I was looking at this as wave A here or wave B, and sure, you know, it can be wave 1 here without any problems. So I was looking at this. It's very difficult to count that up as wave 1, so as a 5-wave structure. So, you know, I think it's the best thing to do is have it as wave B and C here. So it does look sort of corrective. If you wanted to trade that long, well, then you just need maybe some support, because this move coming down here and this move back up here is kind of 50-60%. So going long above the 102 as support would be fine. So if you wanted to do that, then I'll just pop that in there. The risk is high, so when the risk is high, trade less. If you trade, you know, 5 shares, well, then just trade 1 or 2, you know, as the first entry, and then look to add on here. But if this is all correct here, then what we'll be looking for will be a move to 105, and then it's really at this point here above that we can look at being, you know, longer term long and leaving this number here, you know, and going further up. But it's just hard to do that when you know, when you've got a very clear 5 waves structure coming down from the top here in this case, you know, it just sort of, if it was corrective, fine, you know, I mean, I know I can put it as wave 3 here, an A wave and a B wave and a C wave, but I never really understood all this vibration here either. So sometimes CAB is clean and clear and sometimes it's not, and then we get into situations where it could be Arthur and Martha, and we just need to take more care, that's all. It's not that I'm stupid, I'm not that smart either. Probably smarter than clever, but as you get older. Anyway, that's the ASX, and we're lining it up with the rest of the world and the finance sector as well. So let's go and have a look at the other side of the coin, the resources. And just before we do that, I just want to tune into India for a moment. We had a look at the bigger picture the other day, and we also talked about this wave 3 moving down here. It's got kind of a nice 5-wave structure. I mean, the wave, this little move in here is a bit dodgy, but generally speaking, you can see 5 waves there. And we do have a little bit of an overlap here on this. So, you know, maybe we could count it as an A wave, a B wave, and a C wave here. So I'm a bit unsure about that. I can also see here too, it's probably a little bit difficult to see, but this move up here as a B wave will be in 3 waves. So we could label this, I will label it just for the time being, this, because this is what it would look like. A little A wave on the top there, and a little B wave here, and then the rest of it's a C wave. 1, 2, nice strong 3rd wave here, 4th wave here, and then the 5th wave here that's not finished yet. So we're going to go up. A wave B can take the top out there. If it takes the top out there and it's still a B wave, well then it will take the low out through here. So we need to be cautious about that, and the way we're going to handle that is we're looking for the first high above the level, and then we can like draw our line, our triggers and yada 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 there, and look to move up from that point. But even then we would still want this, we would have to look at this as wave 1 at that point, and 2 here. So I'd still need, if it was going to be the 5-wave structure, it would still need another little one up here as well for that. So I need to count the 5 waves up of 1 and 2 here, and all the way up for 3 here, and then 4 and then 5 to get that top. And then we can look at the pullback, and then we can start to move in. So not there yet with the iffy niffy. So let's cruise on to iron ore's up 2.8%. So that's nice. We're expecting that. So I'm not quite at the top here just yet. In a very rough way, we could look at it as 1 and 2 and 3 and 4 and 5. So the beautiful thing about this is that it's positive. But when those 5 waves finishes here, there's a good chance we can have a pullback in that. But the good news is because we've got some sort of 5-wave structure here, we can look at it as wave 1 or wave A and back for B2 and head up high. It still might get corrective up at this point, but all of this could just be an A wave here, a B wave here, and then a C wave here. Or even more complicated, we could end up in a big triangle pattern with a A wave, B wave, C wave, D wave, and an E wave here. But the rest of the commodities are sort of gearing up to move. So in the bigger picture, and it's probably worthwhile having a look at the commodity video that we did yesterday and the day before, just to see how big this, you know, crude oil, copper, and those things. I mean, I think we should just have a little quick look now, and we'll just look at copper because this is I mean, it's the same as the LME pattern as well, London Metal Exchange copper. So all of this through here is corrective, and the best labelling I can see is the ABC for the A wave, 3 for the B, C, D, and E here. And so this just leaves this as wave, I count 5 waves in here, but my problem is it looks like a wave 4 correction here rather than a wave 1, so I still need to resolve that. But the point being here is that this, you know, even if you took this accumulation process along here, and Richard Wyckoff's working for unit, put it up here, we're heading much higher. So this is 1 and 2 and 3 and 4 and 5. And this is what, you know, nickel's doing much the same, but it's slightly a different pattern, but same thing. Crude oil's in the same sort of boat as this. So I don't know how that affects inflation, but all I can say is, you know, Pete the pattern dude is, it's pretty clear to me that this, you're going to see crude double in price for sure, and you're going to see these things, double in price from where they are. So, yeah, I mean, does that make houses go up further and stuff as well? Everything. Yeah, anyway, that's just another story. But anyway, just the commodity side of things. So, but I always know this here is in 3 waves here. So I know that at some point in the future, that top is going to be taken out. So an ETF in iron ore or BHP and those sorts of things would be alrighty. So speaking of BHP, let's go and have a little look at this here. So now, this situation here, I can get wave 1 out of here. Well, in fact, really, I could get wave 1 sitting here with an A and a B and a C wave down here for wave 2 for this. And, this is looking quite good. This is the 60% retracement level here for this. So if it was going to fail, this is where it's going to fail from in this space here. The move up here, I can count it either way. I can count it as wave 1 here or wave A. I really don't know. We made a bit of pocket money out of this here, and that was all pretty rosy. But I've still got stuff in here myself. But who doesn't? So yeah. So, but I know that we're going into a big bull market with this. But I just don't know if we're going down here first and then going up, or we're just going to be ploughing straight up from this point. I mean, once we get up to this point up here and we get a support on here, well, then we can go from 50. The levels after that are 65 and 80 and 100, because that's where I see it going. Looking at copper and nickel and those sorts of things, and BHP is, it's big in copper. So yeah. Okay, so yeah, back on the job. So Rio's much the same as well. It's going to continue to move up into the box here. This can be counted correctively. I mean, we do have a nice 5-wave structure down here. I know that we could also look at it as, wave 1 up here of the next degree higher here in terms of this type of wave 1 up here. And we'll really need to go over this side over here for that. But yeah, I can't prove that until we get support on 120 for this, and it'll be the same for Fortescue as well. It's closer to its 61.8%. So in a way, because it's closer to its 61.8%, this is going to be the first one that's going to find support on that 61.8%, which will be around the 22 mark. So I don't really focus on 22 a lot, but 23 is the top of minor group 1 of 20. So that 23 is get tested support on that. Yeah. But even so too, with this one here, I think I got the count pretty well. I feel okay about the count here. Sometimes I sort of go, oh my God, if I got that right. But, and then this one here, this 3rd wave up here with 5 waves in it. Yeah, sure, it may go higher. But even if we get 4 here, wave 4, and then we go up for wave 5 here around the 23 mark or a bit higher, whatever it is, somewhere after these 5 waves, we're going to have some type of correction anyway. It's going to rebalance to a point. How big, I don't know. I mean, it holds a pretty tight trend. We can go back and have a look at its history. Yeah, we get pullbacks that are okay. We can work those. So we can work that pullback and then mosey off into the sunset after that, So, yeah. Once again, we know we made some pocket money out of this as well, and you still may be long in this, and that's good. I mean, there's no real reason to get out unless you're sort of trading short term in this. So, and yeah, well, that's it. We're going to have a look at the Aussie dollar now, which has moved to the upside, while the US dollar index is moving to the downside. So this was our main count for this market. We also had a bit of an alternative count where wave B could drop a little bit lower, but anyway, this is where it is. We've got this nice ABC pattern here now, and we're looking for 5 waves up. So technically it can come back up to these old highs here, which is a 50-60%. Will it reach there? I don't know. We just got to count the waves as we go, and let's go then. So on the 4-hour chart, picking it up from this low over here of wave A, we've got this as the A, the B and the C for the A wave, and A, B, C for the Well, I need to upgrade those there now, so I need to pull these out, and that one, and we need to put that there, and we can put wave B there. We can just copy that, don't need those, and that's where we are. So we're looking for 5 waves up for wave C. So let's put wave C here for this. And like I said, the target's up at 75, but will it reach that? I don't know. We talked about being long on top of 72. Really nice classic trading level set up here with the arrival, the reaction. Also didn't take that tie out, but this one here, and then sat there and created that high there. So we talked about taking that trade yesterday. So we'll just hang in there at this stage. This has got, this wave 3 here. We need to get a grip on that. So we'll just go to the hourly chart for this. No need to go to the tick chart just yet for this. So picking it up from, we've got the A, B, C for the B wave here, and then we can start counting here. So looking good. We've got wave 1 and 2 and 1 and 2 and 1 and 2. So, the third of the third of the third is the Elliott trade that everybody drools over. So there we go. There it is. It's come and gone. And so we've got 1 and 2 here, and we're, I think there's a little 1, 2, 3, 4, 5. So we're very, very close to that wave 3 top, and then we can look at wave 4 pulling back, which will give an opportunity, and that's pulling back into group 2 there. So you can look at the 72.65 to buy at that price, 72.65 in that vicinity. We will spend time at this wave 5 here, will be roughly the same length as wave 1 here, and that will create wave 3. So we're going to be sort of here for a little while at this point, unless I'm proven wrong, which it's not hard to do. So I'll just keep adjusting these, but you kind of get the picture here where we're looking at now for this. So we've had our 1s and 2s here and our third wave. So that's the middle of the trend here of all of this, from this, from this low to this high here. That's kind of the middle here. Well, at least of this structure. I mean, maybe we go up further, but we have to play this one out first. We've got this old trend line that comes through here from this top here, so that will cause a bit of havoc up there, just so you're aware of that. Could be helpful, maybe it doesn't matter, but the important thing here is what you see is not what you're going to get next. These corrections were sharp and swift and simple. These ones are going to start going sideways and complicated, so be aware of that. Give your stops more space, all of those sorts of things. So there'll be another classic trading levels pattern at the 73 as well. So I don't know if that's going to reach there, but I'll just assume that it sort of may or may not do. And then wave 4 here, and then wave 5 here, and then there's going to be some type of ABC pattern here, checking back on the support. Maybe probably won't drop as low, and then we'll have 5 waves up here for the next move. So if you want to get your timing right, it's pretty much because of this pattern here, we don't really, we can buy above these highs here, and rightfully so, but you can also buy back in here as well. Back in the buying here, and then building over here is a nice way to go. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.